Good morning and welcome back to Almus Market Mornings. Overnight, the biggest update has been on the Israel-Gaza conflict. President Trump and Prime Minister Netanyahu said they had agreed upon a 20-point plan designed to end the war in Gaza. These points include details about hostage exchange and the future governance of the Gaza Strip. On the other hand, Vice President Vance said the government is headed for a shutdown due to the differences with the Democrats. And when it comes to the tariffs, a new sector managed to get President Trump's attention, and that's the movie business. 100% tariff is imposed on any movie made outside the United States. Good morning, JK. No reaction yet to the 20-point plan. Do you think this is going to bring some relief to the gold rally?
Good morning, Swaraj. First of all, it's only agreed between US and the Israeli Prime Minister. Hamas has said while it is open to discussing the proposals, it remains cautious, and the plans demands that include, the disarming and relinquishing control of Gaza is something that the Hamas may not be ready to agree to. So there is still quite a bit of uncertainty about this peace deal going through. That's one of the reasons why, as you said, the gold will not be reversing. And another major reason, of course, which you also hinted about, is the impending shutdown, which is getting more and more likely of the US government. In fact, market is now actually preparing itself for the potential shutdown of the government, as no deal has been reached about approving the funding in the Congress. There are several reasons to believe now that this year's deadline could be a more severe outcome. And the differences between the two factions in the Congress is so severe that it's very difficult. And in fact, there can be the rhetoric coming from the leadership and executives of the two sides is so confrontational that it increases the likelihood of brinkmanship rather than compromise. So I think market is somewhat complacent so far, that going by history it will be a temporary one, and will reverse few days, but it's not prepared for a prolonged shutdown. I think that is something that will be opening up for the market if it continues, and that is the reason why I think now suddenly some investors are being quite cautious. Yesterday, the stock market was subdued. Treasury started, again rallying, in the sense yields started coming down as safe haven buying resumed. Gold made a new high at 38 of 40 almost. So I think now, despite the last week's spate of good data from US on the GDP, jobless claims, and also the private consumption, all that is now, which would have actually given way to some sort of a rise in the yields, has now actually reversed. So I think all focus is on the shutdown, impending shutdown. Now, there is also talk that this time this shutdown can be used by the Trump administration for actual permanent removal of some of the staff, and these things are very sensitive issues. It can create longer term problems as well. One fallout could be that we'll also not have the BLS, that is the Bureau of Labor Statistics, publishing the job data of September, which should ideally come on Friday. In the absence of that, market will be looking only at the private payroll report, which will be published by the the ADP institution. So I think all focus will be on how negotiations go today and what happens from midnight of 30th in the US. Dollar also weakened a bit, unable to build on its gains based on last week's strong data from the US. Of course, on the global side, Chinese PMI has come better. but nothing, it's all within the range. Bank of Japan minutes show that there's a growing consensus for a hike in the rate, and conditions to resume rate hikes have actually started to fall in place. So I think it's very difficult for BOJ to push it backward further. So October looks more likely. You can see that the yen has actually strengthened more than the other currencies. We also have a monetary policy decision by Australia tomorrow. Today at 10 a.m. India time. They are expected to hold the line, but I think recent indications are that their next move could be probably higher because economy has stabilized, and even the inflation has seemed to have bottomed out. So on the currency front, I think despite indications, technical developments, which I was hinting at, that dollar could see some more strength. I think this event of shutdown is probably going to keep it in abeyance. So we will watch the development in this regard. And also, as you mentioned, the fresh tariff on US movie sector again brings back to us the reminder that more announcements could be there. So the uncertainty on the policy front for any sector is now completely open. So you still keep getting some of those policy decisions which will likely affect the industry and the investors as well. On the rupee front, yesterday we had some weakness in the rupee towards 88.80s, but it was averted. A break up was averted. Possible offers from the central bank, but it was very clear that month-end demand was taking over, and even as the Indian stock market continued to underperform overall, foreign investors flows have been continuously negative, which is keeping the flow side somewhat negative, and the demand supply is also on the in favoring the demand side. So central bank is needed to fill the gap that is created by this. We had, of course, the industrial production data, which is came lower than last month at 4%. Manufacturing saw a big slowdown from 6% to 3.8%. However, improvement in other sectors, particularly on the mining and extraction, these made up for the overall number to be not so bad. Today, we'll also have a look at India's external debt, which had reached a record high of 736 billion in March quarter, and the overall debt percentage, is higher, more than 100% as far as the reserves are concerned, and the short-term debt is also increased, with its ratio to foreign exchange reserves climbing to 20.1%. So that's quite a high number. Because short-term debt will always have an impact on the dollar flows. So I think that is some data that I'll be looking at quite closely. So overall, I think dollar rupee is rather well bid, or rather, I would say the upside is not over. I think it is just waiting for some trigger or a larger flows to break the 88.80 levels, and 89 and 89.20 remain the objective for this. So I think a week either way, with or without shutdown, we are going to have a lot of action or a lot of news that we will be focusing on in the coming days. And I think currencies might be subdued now. And of course, with the quarter end, ending today, there can be seasonal flows either side. It can be choppy, but I think on the last quarter of this year could see quite a bit of volatility, unlike the previous years. Thank you.
Thank you, JK. And month end, quarter end, and half year end, lots to look forward to, especially how rupee will move today. Yesterday, we saw some weakness towards 88.80, but a break was avoided due to the central bank intervention. The month end dollar demand likely taking place. Also, the FII flows have been negative. Interestingly, moving on to the global markets, US government shutdown is the talk of the town. No deal has been reached. Both the parties seem quite differentiated in their approaches, and it seems, even Vice President Vance has hinted it is heading for some sort of a shutdown. And as JK also mentioned, this time possibly it could be a long drawn shutdown, which markets are not prepared for. So that's something to look out for. And if this happens, the BLS will not publish the NFP and the unemployment rate, which is due to be published on Friday. So that's something to keep in mind. Gold has made a new high, and 3840 almost, and yields in the US were also down. Dollar could not make further headway. This is a dollar index. And interestingly, BOJ minutes show more in favor of a rate hike due to the current inflation situation. So that's something to watch out for in the next meetings. That's it from us today. Thanks for listening. We'll catch up tomorrow with a fresh round of updates on the financial markets.